Why? Invest in mutual funds. This is your money. You work hard for it. You spend it on things you need, people you love. You also save it. You ask yourself, what do I do with the money? How do I make my money grow? How do I achieve my goals and build wealth? You ask your friends, your colleagues, you research online. Some might suggest fixed deposits, insurance policies, stocks, or even real estate, and some might suggest mutual funds. But what exactly are mutual funds? A mutual fund is a pooled investment vehicle. Money is collected from a number of investors, which is then invested on their behalf in a set of stocks or debt securities. There are many types of mutual funds. Each mutual fund has a fund manager who decides what to buy, when to buy, and when to sell. The profits made or the losses incurred are proportionately shared between all the investors. And the AMC receives a small management fee from each investor in exchange for their services. When you decide to invest in mutual funds, you get the services of professional fund managers. Investing in mutual funds is regulated, transparent, and is also a tax-efficient investment vehicle. This professional fund management can help you reach your financial goals. You can begin investing as low as ₹1,000 for lump sum or ₹100 for SIP investments in mutual funds. Asset management companies invest in not one but several industries in stock and various securities in debt. This diversification helps mutual fund investors hedge against unsystematic risks, which reduces the potential for loss. You don't just invest in mutual funds, you invest through them. There is a mutual fund type for every type of investor. There are debt, equity, and balanced or hybrid funds. And if you are a beginner or don't want to devote too much time researching, then mutual funds can make for a hassle-free investment. Investments can be goal-oriented. You can aim to fulfill your short-term, mid-term, and long-term goals by investing in mutual funds. Mutual funds are well regulated and provide monthly fund fact sheets to keep investors informed. Investing in mutual funds also brings tax advantages. Under Section 80C of the Income Tax Act of 1961, investing in an ELSS fund entitles you to a reduction of up to ₹1.5 lakh on your taxable income. With SIP, you can invest at both high and low points without manually timing the market. Over the long term, diversification and compounding may lead to potential growth. Given the benefits, mutual funds make for a very practical investment. It is better to start investing sooner rather than later. Mutual funds can become the stepping stone to your dreams, your goals, and creating wealth. Why not make your money grow? Why not take a step towards achieving your dreams? Why not invest in mutual funds?
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.